The Nigeria Sovereign Investment Authority is an investment institution of the Federation which manages Nigeria's sovereign wealth fund. The NSIA was established as an independent investment institution by an act of the National Assembly back in May of 2011. Let's take a look at the financial performance of the fund as at its last published accounts in 2020. Operating income, 160 billion naira there, 313% climb from 2019. Look at the AUM, assets under management, 981 billion naira there, almost a 40% climb from 2019, and net profit 156 billion, 354% climb. So we're joined live from our Abuja studio by the Managing Director and CEO of the Nigeria Sovereign Investment Authority, Mr. Uche Orji, to talk about the results and also talk about the sovereign fund outlook for the Investment Authority. Good morning to you, sir. Thank you so much for joining us. How was the NSIA able to post those returns in a pandemic year?
Well, thank you very much. Good morning. So that was 2020. We haven't really published 2021 yet, which we'll be publishing in the next few weeks. But 2020, and I think we addressed that in this show, was a good year for us. But you also remember that there were 3 or 4 factors that drove the returns in 2020. The first was the significant amount of support provided to markets by various governments, particularly in developed economies. Secondly was what we felt was going to be a revenge purchase by consumers who had sat at home for a very long time. And then you saw that once the lockdown eased, people just started to spend money. And so retail numbers were up, consumer confidence numbers were up, jobs numbers were improving. As an investor, you invest ahead of those kind of inflection points. The third factor was an asset rebalancing program that we did that got us into a bit more into venture capital and a bit more also into developed market equities. We had a slightly lower allocation in 2019, but in 2020 we shifted that as we saw governments across the world start to provide significant support for their economies. And so all of those investments, and then finally, of course, we saw the pandemic as an opportunity. Anytime you saw big dislocations in markets, it's always an opportunity to buy into the stock market. And so when the pandemic started and everybody was selling, we actually took a decision to put more capital to work in the market, and that was what helped us post those results in 2020. But I also did guide you that 2021 will not be as strong as 2020. But from indications we have seen so far, I have also been pleasantly surprised with the way 2021 has looked for us. So once we publish those data, I'll give you some more detail on that within the next few weeks.
Fantastic. All right, so we can expect to receive those financials for 2021 over the next few weeks. So we'll get that I guess this month or next month, hopefully.
Certainly.
Fantastic.
Certainly. The audit is just being completed, but looking very optimistic into them, yes.
Great stuff, great stuff. I want to talk to you about fertilizers. Aliko Dangote was at the 4th annual Nigeria Food Processors and Nutrition Leadership Forum last week. Here's what he had to say about the impact of the Russia invasion of Ukraine on fertilizers. Take a look at his quote here. It says there's going to be a shortage of wheat, maize, and lots of products because as we speak now, Russia and Ukraine do almost 30% of the world's urea and 26% of potash and phosphate. Also, there will be a scarcity of food generally. We will not be able to access fertilizers going forward. I actually want to couple this with your appearance on the morning show this month last year, exactly a month ago, or actually a year ago this month, where you talked about your investment with Morocco's state fertilizer company, OCP. Let's take a look at what you had to say there.
If you recall, back in 2017, the NSIA was tasked with managing the Presidential Fertilizer Initiative, which had its own accomplishments in its own right. But the major partner in that program was OCP. At the time, the government wanted to domesticate the production of fertilizer blends in Nigeria. And for that to happen, we needed to buy a few raw materials, ammonium phosphate from Morocco, and potash, which we now buy from Russia, and then urea from Indorama. So these are blended to produce the fertilizer needed in Nigeria.
Sir, how far along are we with that deal? And what's the impact of the Russia-Ukraine war? Is it a threat to inputs like potash, which, as you said there a year ago, are buying from Russia?
Correct. But it's a big threat. There's no way to sugarcoat it. It's something no one prepared for. And like Aliko said, it's 26% of global supply of potash. But I would say 2 or 3 things. First of all, we had been a bit lucky last year. We oversupplied the market last year. So for Nigeria, there's still a substantial amount of inventory in the channel, which I believe will help us navigate the early phases of this dislocation. The second point is that we are now looking at alternative suppliers to potash, which I hope will bear fruits within the next few days. And so we'll be able to continue to have potash, which is a part of our overall blend, coming. At the moment, we're focused on availability, because obviously with what's happened in Russia, the first victim was pricing. Okay, so we all know what's happened. It's not just potash from Russia, it's what's done to natural gas. Natural gas is essential for ammonium phosphate, it's essential for urea, it's essential for many things in the fertilizer subsector, and the price of natural gas has gone up more than 400%. So that is having a knock-on effect on the price of raw materials. But I will say the following, I don't see any reason for panic just yet, because we had a significant quantity of raw materials carried over from last year into this year. We've had a strategy of structural oversupply to ensure that we don't have this type of situation. So I'm hoping that the work we're doing now, and I believe in the next couple of days, we'll be able to have, the next few days, actually maybe give it a week, we'll be able to completely sort out our alternative supply sources for potash. But I will tell you this, potash, whilst it's important, is only 16% of the mainstream product we use in Nigeria, which is the NPK 2010-10. So potash is about 16% of that. Urea is a dominant component of that, and urea we have two major producers in Nigeria, Indorama and Dangote, and so we're not short of that. Phosphate comes from Morocco. That has not been affected by the issue of Ukraine versus Russia, and we have vessels on their way for phosphate from Morocco. Limestone, which is the other material that's used in our blend, is locally sourced in Nigeria. So potash is where we have this issue from Ukraine and Russia. And so my view is the following. There's substantial material on ground at the moment to get us started through the rest of the year. We're doing a lot of work on getting alternative supplies, and that, I think, is something that should be sorted out soon. And then, of course, there are other ways to also blend products around some of these, especially a material like potash, which is 16% of the mainstream product we use in Nigeria. Obviously, there's some products that need more of it. If you're a palm producer, that could be a challenge because they use a little bit more of potash. But in the mainstream of the key products, maize, wheat, sesame, all those type of things, rice in Nigeria, we do have urea, we have phosphates, we have limestone, and we have enough potash at the moment for us not to feel any real challenge in the first phase of this problem. Of course, stepping back from all this, it's a big dislocation. The challenge we have seen in the last 2 years, we have seen two major dislocations to world trade. We've had the COVID pandemic, and now we've had this Russia-Ukraine challenge. It speaks to one thing. Most countries cannot depend on trade to run their economies. We have to start to invest locally. So I'm glad to report that the president recently approved for the SMDF, of course, working along with the NSIA and the PFI program, to actively commence development of potash locally in Nigeria. There's a significant quantity of potash deposits running all the way from Gombe State all the way down through to Benue State, which needs to be developed. So we now need to focus on making sure that we do not have too much dependence on trade. We have to develop our local supply of potash and phosphate as well, which has some interesting deposits in Sokoto State. Urea, like I said, we make from natural gas that we have two major suppliers in the world today, Indorama and Dangote. So the positive from all this, in my view, is that it is giving impetus to the effort that we're making to make these things locally. I wish we had completed the plant with OCP much earlier, but we started early. We started in 2017 to plan this. These are big projects that do take time to get developed, but I'm hoping that this goes one way further to underscore the importance of that project and the need to be self-sufficient in these critical materials for fertilizer.
Thank you so much for the breakdown, sir. And of course, I believe you are a chemical engineer, so it shows with your breakdown there of what we're using, how the fertilizers count and everything. SMDF, of course, that's the Solid Minerals Development Fund. Now, I want to touch on what you just said about the amount of time it takes for infrastructure to yield fruit. Here you are in September. I think it was on the Arise Exchange with our very own Bosun Amofaye. I think the president had just approved the third board for the NSIA. You were talking about, infrastructure plans. Let's take a listen to you here.
The president has given us a mandate to drive more economic diversification and make sure there's more impact. So you'll expect to see more investments in infrastructure. That's always also been the strategy of the organization anyway. I think we've talked to that many times on this show, in previous shows on Arise TV. you're going to see us drive more and more into different aspects of infrastructure and direct investments in the country that will benefit Nigerians.
Thank you, sir. And I know you're pressed for time because there's a whole lot going. I just want to quickly ask you about returns in the equities market globally versus infrastructure investments, which is part of your mandate. And maybe this is not a fair comparison, but I just want to show Norway's sovereign wealth fund, their returns for 2021, where they brought in about $177 billion. I think their return on investment was like 14.7%, second or best performing sovereign wealth fund in the world. Now, I just want to ask you this. I know that you have a mandate for infrastructure, but is there an opportunity cost considering the time lag of infrastructure developments versus what you could get where, I mean, look at this, tech stocks made up 30% of what they got. Like tech stocks at about 30% returns, Microsoft, Alphabet, Apple. Is there an opportunity cost? That's my question, my long-winded question to you, sir, as far as infrastructure versus what else the NSIA could be earning.
It's a very good question, and it's a fair question, but I think you need to understand the following 3 or 4 points. First, the comparison between the Norwegian Sovereign Wealth Fund and the NSIA should be the NSIA's Future Generations Fund. And for that fund, I'll give you a heads up for what will come in 2021. At the moment, as at the end of the year, pre-audited numbers, the returns on the Future Generations Fund is 12% in dollars, right? So that's not too far off from what you have with the Norwegian Sovereign Wealth Fund. So I think that is a fair comparison to make. But having said that, though, I need you to also make a second point. The NSIA asset allocation within the Future Generations Fund is lower beta, right? And I say that only because the markets also go up and come down, right? So it's one thing to capture a bull market period and say, oh, we could have done this. But you also need to be very mindful of risk. Late last year, and I think both in March and in May on your shows here, I warned about inflation. I warned about the impact of inflation on technology companies. And I said we will start to take risk off early. And we started to take risk off early before the end of last year. This year so far, you can see what's happening in the market. Technology stocks are being completely damaged because of the overall inflationary environment. There's a high level of correlation between negative correlation between inflation and highly rated technology stocks. The other area that gets damaged by this is also emerging markets. So we warned about all this. So we started to take risk off early last year. We could leave the last 2, 3, 4% on the table, but it's better to protect your portfolio on the downside. So that's the first point you need to make about the Future Generations Fund, the asset allocation in there, and in comparison to other people. And I'd like to challenge you to look back at some of those other funds that are highly exposed to growth stocks. In 2008, in the scenario of 2008 when we had the global financial crisis, many of those funds were down 30, 40%. We are not structured to have those kind of downsides. So every fund solves it has its own asset allocation objectives. Now, I'll make a separate point about infrastructure investments. I don't think it is fair to take a snapshot of a year and compare infrastructure investments. Infrastructure investments are long dated, 20-year horizon on average, which means you go through a construction period, you go through a ramp-up operational period, and then you start earning your returns. The statistics have shown that in the long run, the returns are not really far off each other. Because with equity markets, you go up, you come down, you have the cycles. But infrastructure, because of the steady state nature of the returns after you've constructed them, tend to eventually equalize. It's about time horizon. 1 year for an equity market versus 20 years for an infrastructure market is not really a right comparison to make. Third point to make is there a opportunity cost? Here's my answer to that. Every fund solves its own problems. Every fund. In Nigeria, we have a problem with infrastructure. It requires investments. We must invest in them. Perhaps our peers in other countries have solved those infrastructure problems. The Norwegian Sovereign Wealth Fund, which you referenced, which is a gold-based standard for almost everybody, does not invest in domestic infrastructure because they don't see that as a need for their fund, which is great. But we have that as a need for our fund, and we must invest in those in Nigeria. So it's not about an opportunity cost or trade-off. It's about your fund solving your problem for you. And in the case of Nigeria, it does. And you're starting to see the efforts of some of the investments we're making, things like the Second Niger Bridge, Abuja-Kano Road, Lagos-Ibadan Expressway. These are all very necessary infrastructure investments. 20 years, 30 years down the line, we can look back and see what the returns eventually are. But my sense is that if you look at infrastructure investments over the long haul, they tend not to be too far off from equity investments. There are specialized infrastructure funds in the world today. One of the biggest is Global Infrastructure Partners, run by Bayo Gunlesi in New York. It's a big fund dedicated only to infrastructure. He will not be as big as that fund is today if the returns are that far different from equity investors in the long run. And I think one last point is investors, have a balanced portfolio, which is a bit of infrastructure, a bit of real estate, a bit of equities, private equity, venture capital, and create a proper portfolio. So I think at the end of the day, that is how you should look at it in a holistic portfolio manner.
Mr. Orji, excellent stuff. I wish we could have you for longer. Thank you for, point well made, sir. Mr. Uche Orji.
We can take, yeah.
More, yeah, so definitely have you back again. MD, CEO, Nigeria Sovereign Investment Authority. Thank you so much for joining us. Appreciate your time, sir.